So until yesterday, what we have discussed about the, okay, we have discussed about the, okay, then raw material types, pricing indicators, we have discussed all those things. So today this is the one important, okay, the key thing what we are going to discuss today. Okay, so then as I have explained yesterday, here the price differences are two types. Okay, first of all, what is the price difference? Okay, let us discuss about the price difference. Then once we will be clear on that, then we'll discuss about the batch input method and a moving average method. First we'll discuss about the price difference. What is mean by price difference here? Okay, then what is price difference? What is, okay, what is mean by price differences here? Okay, now I will give the example, okay, with example, so that it will be easy for you to understand. Okay, what will happen on 10th of February, 10th of February, okay, we have purchased some raw material, okay, raw material purchases, raw material, raw material, raw material purchases. Okay, then I will mention here is the, okay, we'll follow the structure, date, description, quantity, how many quantity we have purchased, then price per unit, okay, then total cost, or else I'll mention is the cost. Okay, then now, so what I have done, the quantity, let us assume I have purchased is a 100 quantity, or else 500 quantity I have purchased here. Okay, so then I have placed the order. Then per unit cost would be a, let us assume is a 10 rupees. Okay, what will happen here is the, okay, 500 into 10 rupees is a 5,000 rupees is the total cost. Okay, then let us assume, okay, on 15th of, on 15th of February, on 15th of February, okay, we have received goods, goods received, goods receipt happened. Okay, so on 15th of February, we have received goods from the supplier or vendor. Okay, the quantity is a 5,000 quantity we have received. Okay, then we don't know, because at the time of goods receipt, okay, we don't know the I mean price per unit. Okay, let it be blank. Okay, then we have received 5,000 quantity, because we are receiving goods at stores. Okay, the stores person don't want to all this information, whether 5,000 quantity we have ordered, whether that quantity received or not. Only that is a concern about the concern. Okay, stores person will have, stores or warehouse. Then on 20th of February, then after goods received, invoice, invoice received, invoice, invoice received, invoice received. Okay, what we have done, we have received invoice from the vendor, supplier, but instead of 10 rupees, what he mentioned is a 12 rupees. Then what would be the cost? 12 in 12 into. So the cost here, you can see the, this is the purchase order price. This is the purchase order price per unit we have quoted is a 10 rupees. But now instead of that one, 12 rupees what vendor has sent. Okay, what vendor has sent is a 12 rupees per unit cost. Okay, here remember, there are some organizations may accept this difference, the invoice price difference. Some organizations may not accept. Only they will go for the, okay, whatever the price which we have entered at the time of purchase order. Okay, but that is a depends on the organization to organization. But remember here, okay, in case if the organization is accepting this price difference, the difference 1,000 rupees as compare with the, okay, the cost is a 500 rupees is the in purchase order price, then the cost of invoice is a 1,000 rupees. What is the difference here? if we talk about difference, 1000, this we are going to call it as a price difference. So the price difference between purchase order and invoice, okay, this we are going to call it as a price difference. Okay, what is the price difference? These 1000 rupees, whatever the difference which are we are seeing here, this we want to show into separate GL account again. Then if the stock, meaning that, okay, what we have done, the 500 quantity we have received from the vendor, this 500 quantity we have not utilized for our production purpose. Still the quantity which is lying in my warehouse. At that point of time, this 1000 quantity, this 1000 rupees, the price difference 1000 rupees, I am going to transfer to the inventory account. In case from this quantity, from this 500 quantity, some portion of the amount I have utilized. Okay, let us assume I will give the scenario here. Okay, please understand here, this is the important one. Okay, how the price difference accounting entries will get posted. Okay, and also interview point of view also, okay, they must ask you the question. They must ask 900, not 100, 2000% also I'll give guarantee. Then they must ask you in interview how the price difference accounting entries will get posted into the system. Okay, now let us assume, okay, we have received here. Okay, then, so here this is the price difference, we have concluded this one. Then let me take the same scenario. Here we have not yet received the invoice. Okay, we have not, okay, maybe we have received invoice on 20th, but in between what will happen, let us assume 18th of February, 18th of February, consumption happen. Consumption. So consumption is nothing but I have a 500 quantity. From this 500 kgs, let us assume 500 kgs I have the raw material. From this 500 kgs I have utilized is the 200 quantity. Then what is my available quantity here? Then it's a 300 only. Then this is the available quantity. Available quantity. Then here, this is my, at this moment I am having this, the 300 rupees is the quantity, but now after utilization we have received the invoice, whatever it may be, that is fine. Then how the accounting entries which I am going to see, remember, then what is my total available, I have, remember, here I have utilized, I have consumed, okay, 200 kgs for my manufacturing purpose. Then still I am having 300 rupees. Okay, but total is a 500 rupees, remember. Then how the difference we can post? Okay, first let me describe the accounting entries. Okay, as I have explained, okay, as per this process, until purchase order creation there are no accounting entries, remember. Then once the goods receipt, okay, once the goods receipt, what will happen? Okay, raw material purchases, okay, then this is the PO, then goods receipt. Okay, then for goods receipt, what is the accounting entry here? I'll make, okay, okay, I'll mention here. Otherwise, I'll mention here is the goods receipt. This is a goods receipt. Accounting entry. Then inventory raw material account data to GRIR clearing account. Take it this one. Then the accounting entry is a inventory raw material. Inventory raw material account is going to debit. Then GRIR. Then GRIR clearing account. So what is my inventory raw material account? The cost would be 5,000 rupees. Okay, then here also is a 5,000 rupees. Okay, so here what is going to happen here? This is the accounting entry for my raw material when I received the goods. Then consumption. what is the accounting entry for the consumption? Okay, so the consumption accounting entry would be whenever the consumption which is going to happen, then consumption accounting entry. Then how the consumption accounting entry, what will happen? Consumption, raw material consumption, I'll mention like this: raw material consumption, raw material consumption account will be debit. Then to to my inventory account, to my stock account. Inventory raw material is nothing but your stock account. Okay, inventory raw material or stock account. Stock account is going to credit. Okay, so then here, how much inventory you have consumed? Remember, okay, how much the how much inventory you have consumed here? Okay, we have consumed here is a 200 quantity. 200 quantity into 200 quantity into 10 rupees. Okay, what will happen here is the raw material consumption is a, okay, 2000 rupees. Then what will happen here? Okay, then here is the consumption account is at 2000, then inventory account is at 2000. Then this is the accounting entry for, remember, this is the accounting entry is for the consumption. Then whatever the consumption what you have done, remember. Then on 20th of February we have received the invoice. Remember, on 20th of February, so we have on 20th of February, okay. So on 20th of February, we have received the invoice. What is the accounting entry? Okay. When we received invoice from the vendor, okay, because he mentioned that, okay, he mentioned that is a 1,000 rupees extra. So 12 rupees per unit. Okay. How the accounting entry at the accounting, okay, invoice, invoice verification accounting entry. Okay, so invoice verification accounting entry, how the accounting entry will get posted here. Everything we need to record here. Okay, first of all, then here when we receive invoice from GRIR clearing account, GRIR clearing account is going to debit. What is the amount the GRIR clearing account is a 5,000 rupees equal we are posting. What is the amount which we have mentioned? 5,000 rupees. Then the next one is the inventory raw material account is going to debit. What is this account? What is this inventory raw material account? This we need to understand here. Now, from this 500 quantity, we have consumed 200 kgs. I have a 500 kgs. From that 500 kgs, I have utilized 200 kgs. What would be my rest quantity 300. Okay, but before going to that one, these 1,000 rupees, the difference, what is the difference per kg cost is a 2 rupees. Okay, now how I can charge? Okay, see, 500 into, okay, 1,000 divided by 500 rupees, the price difference per unit. Okay, price difference per unit is a 1,000 rupees difference, it is there. Okay, so 1,000, sorry, I will mention is a 1,000 divided by what is our quantity? Quantity is a 500 quantity which we have purchased. Then the price difference is a 2 rupees per unit. This is clear. Okay, so then what is the utilization quantity? Utilization quantity is a, okay, utilization quantity is a 200. Then available quantity is a 300. Then the cost here what I need to do here, okay, cost, okay, the cost here here cost estimation. Okay, 200 into 2 rupees. 200 is the consumption, right? 200 into 2 rupees. Then 400 rupees. Then 300 into, okay, 300 300 available quantity. 300 into price difference is at 2 rupees. Total what is happened here is the total my 1000 rupees. These 1000 rupees, okay, I will put it in separate way. Then these 1000 rupees, whatever the 1000 which we have calculated here, okay, these 1000 rupees, the price difference breakup value. Okay, breakup value here you can understand here like this. Then here what is happened here, okay, this 400 rupees which is relevant. Okay, the 400 rupees is belongs to your consumption, consumed material price difference. These 400 whatever you are showing here, okay, whatever you are showing here is the, put it here, okay, remove this one. Then this one is the breakup. Okay, the breakup value I'll mention here. I will take a separate box here for our understanding. Then sorry. Okay, so here this you need to understand here. These 400 rupees which we are going to charge or which we are going to show into price difference GL account. Price difference GL account. So the 400 rupees we are going to show into the price difference account. See why we are showing this 400 rupees into price difference account? Because we have already utilized the quantity of 200 rupees. For this 200 rupees, the per unit the price difference is at 200 rupees. So that is the reason this 400 rupees which I want to show into my price difference GL account. Then what about the 600? So then for this one, for this 400 rupees, what I will do, then here what I will do, price difference account is going to debit. Okay, then the how we are going to estimate the 200 utilization quantity into 2 rupees, sorry, into 2 rupees. What will happen? Total is the 400 rupees, right? This 400 rupees I am showing here. 400 rupees. I'll put it even this one also the value. Now the still I have a 300 kg stock still with me. Okay, so that stock, okay, still I have not yet consumed this quantity. Okay, still the quantity with me. Okay, once the utilization will happen, again this amount I will transfer to the price difference account. But until utilization, I would like to show this amount, the difference amount, this amount into inventory account. Why we need to show into inventory account? Still the quantity with us, we have not yet utilized. Okay, then I'll mention here is the quantity 300 quantity into 2 rupees, sorry, 300 quantity into 2 rupees. Okay, what will happen is a 600 rupees the total cost would be. Okay, the 600 what I am showing here. Then to the last one is a to vendor account. To vendor account, what will happen? The total cost is a to vendor account is credit is a 6,000 rupees. Now you just see here, this is the debit value is 600, this value is the credit is the 6,000 rupees total. Okay, this is what the price differences are going to hit. Okay, if the for available quantity we need to book that the amount to, we need to show that amount into inventory account. Okay, and for consumption we need to show that entry into the, okay, price difference account. This is what the how the price differences which are going to hit. Okay, so if anyone is having any further query here, please let me know. This is a very important one for your and FI integration, because you need to aware all these things. If anyone is having any further queries, so please let me know.
Yeah, Vijay, I have a doubt. Like,
Yeah.
interviewer will ask orally, or he will ask us to do any practical work?
No practical work. They will ask you, can you explain about first? They will come from the process flow. You need to explain the P2P cycle entire process. Then after that, you need to explain about the accounting entries one by one. Whatever the accounting entries I have described here, you need to explain the accounting entries also. Okay.
Okay.
Yeah. Fine. Thanks. Fine. So any further query? Anyone is having close? Anyone? Okay. Fine. Then okay. So now now we understand that one. Okay, price differences. Okay, what is the price difference? We have discussed the detailed discussion. Now let us jump into the batch input method, how it will work. Okay, so first we'll discuss about the batch input method. Okay, so what is the batch input method? Okay, then I will take the same example, whatever the example which I have taken here. Okay, so that it will be easy for us to understand. Okay, what I will do, let me put it here. I will take the same example so that it will be easy for us to understand. Then, okay. So here, what will happen here? Okay. So the same example I have taken here. Okay. So in batch input method, what will happen? Let us assume on 20th of, okay, 10th of February, right? What we can do? I will do one thing. Then let us assume here. Okay. So I will put it one more. Fine. Then on 12th of February, on 12th of February 23, we have placed the one more purchase order. Okay, so we have placed the one more purchase order. Then the quantity we have ordered is a, let us assume is a, again is a 200 quantity we have ordered. Okay, so then the cost would be a, then the cost of this one which I am going to order is a, let us assume is a 25 rupees. So the cost is a 5,000 rupees here also. Okay, the cost is at each quantity which I have ordered. Okay, I will do changes here, or else let me do here. Okay, so the quantity which I have ordered is a 50 quantity. Sorry, 200 quantity. Price per kg, price per unit is a 50 rupees. Okay, what will happen here? The total cost would be, the total cost is a 15,000 rupees. Then the total which I am, the available quantity is a, okay, 700 quantity. Just understand this one. Then now now what I am doing here, that then goods receipt. Okay, goods then still we have, I mean, the available quantity. Okay, we have not yet received goods. Okay, sorry. Okay, we have received goods. Okay, we have received goods on, okay, 15th of February. So 15th of February we have received goods. Okay, the total available quantity, okay, whatever it may be, total available quantity now is the 700. Okay, I'll put it is the 700 rupees. Okay. It is not front to back. It is fine. Even it is not moving. Okay, fine. So we have the, I will next slide changes here. Okay, so it will be visible now. Now we have the 700 quantity. Okay, from this 700 quantity, okay, let us assume I have consumed is the same 200 quantity. Okay, 200 quantity here. But now here the 200 quantity whatever consumption happened. Okay, before going to this one, what is my average price here? The average price of what we have discussed yesterday, 7, I mean 15,000 divided by, okay, average price. We are having is a total is a 15,000 rupees, the total cost. divided by 700 quantity. My average price would be a 21.42. Okay, if we talk about the 21.43. Okay, this is my average price. But now here in batch input method, what we are going to see, so then we are not going to consider the moving average price here. Okay, so the now these 200 rupees whatever these 200 quantity whatever consumption has been happened, this is only I am going to show in my books of account 10 rupees per unit only. Okay, 10 rupees per unit only. Okay, what is the consumption cost? If we talk about the consumption cost, 200 into 10, this 200, this 5, from this 500 I have consumed is a 200. Okay, I'll mention it. This I'll change this one because it is confusing for you. Then here is the 800, because 200 again you are confusing. That is the reason I just changed quantity here. Then now this the 200 rupees which I have consumed from the whatever I have received on whatever I have received, okay, on behalf of the 10th February purchase order, against this purchase order. Okay, then I have received goods from that batch or from that quantity. I am utilizing 200 quantity. Then what is my consumption value here is the, okay, 200 into 10, 2000 rupees. Okay, 2000 rupees, what it will happen here. Okay, so what would be my rest quantity here? Goods receipt I'll mention here is the 800 quantity we will have. Okay, then that the rest quantity, available quantity we will have is a 600 quantity. Okay, then what will happen here? This minus, okay, 20,000 minus this one is the minus, because okay, I need to make this minus. Then what is my after consumption? Okay, this is a 20,000 rupees after consumption of this one. Okay, after consumption of this one, what would be my, this one also I'll make it one step down. Then the available quantity, this is the available quantity. What is the available price here? Then 18,000 rupees. Okay, so 18,000 rupees, how it has been arrived? 20,000 minus 2,000 rupees, now 18,000 rupees which is having. Okay, so 18,000 which I am having. Okay, remember. Then okay, so now here you can see here what we have done. Okay, 150 quantity we are having. Okay, 150 quantity we are having. What will happen? The accounting entry is the inventory raw material data. Then let us assume the invoice has sent, okay, with 12 rupees for this quantity, for this, for the first invoice whatever we have placed on 10th of February. Okay, so the inventory raw material account data to GRIR clearing account 5,000 5,000. I am only considering the this invoice related, sorry, this purchase order related value. I am not considering about this one. Okay, even we have received invoice only for 10th February's purchase order only. We have not yet received invoice for 12th of February purchase order. Remember. Okay, then now inventory raw material account data to GRIR clearing account here. What will happen? Then the consumption, raw material consumption account data to inventory account to 2,000 rupees here. Okay, then what will happen? Then at the time of invoice verification, what will happen? This 5,000 rupees which I am going to show. Okay, this 5,000 rupees is a, I am going to show the same value. Then here the consumption, whatever the consumption which I have utilized. Okay, the consumption to, okay, 200 kgs which I have utilized. Okay, 200 into 2 rupees, the price difference here we have talked about, right? Price difference 400 rupees. Then then here the final, this is the accounting entry. So meaning that the batch input method, the average price we are not going to consider the for the batch input method. What will happen? Only we are going to see we are going to see the, okay, the batch wise the price. Okay, this only I am going to consider. Okay, then once I receive the invoice against this purchase order, if there will be any consumption, again I will go and I will charge that amount. But you need to understand that one. Okay, we are not going to, okay, see that the average price for this one. Okay, now if you want to make it as average, you need to do, okay, average. Okay, but now for batch input method, I am going to consider this one. Okay, this one only. The price is a 10 rupees only. I am not going to consider as an average price here. But now earlier, what we used to do here, instead of the consumption, in the consumption, what we used to do, what is the average price? That average price we need to make it as a consumption. Okay, but now here I am not going to consider that one in batch input method. Then let me go to the moving average method. Okay, in this moving average method, okay, again we have a three three are there. Okay, moving average method: stock fully available, stock partially available, stock not available. Okay, so in this moving average method, stock fully available, first let us discuss about this one. Do one here. To blank here. Fine. Okay, now moving average method. Okay, so the moving average method, now let me take the same example here also. Okay, how the moving average method will work here. So under the moving average method, the stock fully available. Okay, okay, here now here we'll talk about the same example only. Okay, here what we have done. Okay, so we have ordered the purchase, the quantity is 100. The quantity for first purchase order 500, second purchase order is a 300 rupees. Then here is a 10, 50. This will be the same. Okay, then the inventory raw material account data to GRIR clearing account when we received invoice from the customer. Then the consumption. Okay, let us assume from this one here is the consumption. Okay, so now here what will happen. Okay, here what will happen. Okay, so now the total quantity, how much the total quantity which I am having is a 800 rupees the quantity. Okay, so then what will happen, the consumption is happened is a 200, let us assume. Okay, for this 200 rupees, for this 200 kgs. Okay, for this 200 kgs, what is the average price? That is what the difference between batch input method and moving average method. Now what is the average price? Let us assume 20,000 cost divided by total quantity, average price. Average price, what is my price is at 20,000 rupees divided by 800 quantity. This is my average price. Remember, understand here. Okay, this is my average price. 25 rupees is my average price. The consumption, for this consumption I am not going to charge is a 10 rupees because since it was the batch input method. But for here is the 25 rupees what I am charging here. Okay, remember. Then how the 25 rupees has been arrived, I have already explained here. Okay, then 200 into 25, what would be my cost is a 5,000 rupees. The consumption which is happened is a, remember, the consumption is happened is a, okay, 5,000 rupees. Here the consumption cost is a, okay, 5,000 here. Okay, what will be the total net amount? Okay, is the 25,000 rupees which I am having is the net amount is a, okay, which I am having is the, okay, 25,000 rupees. Then okay, now Okay, so now let us see the accounting entries. Okay, so the consumption, whatever the consumption which has happened, here is the 5,000 rupees. Remember, then same here also debit credit 5,000 rupees. Then what will happen here is the 25,000. Okay, so here it is the inventory raw material account data to. Okay, then what will happen, the final GRIR clearing account is a. Okay, so then here 5,000 raw material consumption 25 into 200, 25 to 200, 5,000 rupees only. Okay, 5,000 rupees. Okay, here what will happen, the consumption account is a 5,000 is a debit, then it's a stock account, it is crediting is a 5,000. Then at the time of invoice verification, what will happen, then GRIR clearing account. Okay, what will happen, GRIR clearing account is a 5,000 rupees. Then what will happen, then GRIR clearing account. Then in case if this is the price difference, even though if they have sent the price difference. Okay, even though in case if vendor has sent the okay price differ vendor has sent the 12 rupees, 12 rupees, but even though we have considered is a 10, even though the vendor has sent that received invoice only for the whichever the purchase order we have placed on 10th of February, against this purchase order we have received the invoice, even though in that the vendor mentioned that one is a okay 12 rupees the price difference. Okay, from this for this 12 rupees, how we are going to charge this one. Okay, how we are going to charge this one. Then now now what, how much quantity from this one, from this we have consumed is a, let us assume 200 quantity we have consumed here. Okay, the GRIR clearing account is same. Okay, then we have consumption is happened to 200 rupees. Then what will happen, 200 into 2 rupees is a 400 rupees. Okay, 400 rupees it is going to the price difference account. Then what will happen here is the inventory raw material account. Okay, still we have the quantity is the okay 200 quantity. Okay, still. Okay, here what will happen, inventory raw material account data, the straightforward, here we have the stock fully available. Okay, stock fully available at this point of time, what will happen, GRIR clearing account data, then inventory raw material will be debit, then the price difference to vendor account. Okay, what will happen here, price difference. Okay, so the inventory raw material, because still we have the available quantity here. Okay, the this is the 1,000 rupees, because still we have the quantity, the whatever the stock we want to utilize, the stock is available fully with us. So that is the reason GRIR clearing account will be debit, inventory raw material account debit. Okay, here this is not the one. Okay, then let me remove this one also. Then inventory account, because I have the stock fully available, I don't have any deficient stock here. Okay, then the total vendor account. Okay, the how the 6,000 has been arrived, 1,200 into 500, 12 rupees into 500 quantity, then total is a 6,000 rupees, 12 into 5,000 500, then this is the amount. So GRIR clearing account, then inventory raw material account. Okay, then the final one would be a okay final. Then how this has been arrived, how the 1,000 has been arrived, then 500 quantity into 2 rupees. Okay, the 1,000 rupees has been arrived, since here we have the stock fully available here. Okay, we don't have the deficient stock here. Okay, now this is the average price. Okay, now stock partially available. Okay, in case what will happen, in case the stock partially available is nothing but a, i don't have the I don't have the sufficient stock in my warehouse. Okay, at that point of time, how we need to treat. Okay, let us see that one. Then okay, stock fully available, right? Then stock partially available. The next one is that stock partially available. Stock partially available. So meaning that I have a less quantity. I want to utilize 100 quantity, but I am having the less quantity. Okay, from the purchase order. Then okay. So now here we'll take the same example, but only thing is that here I am going to change the utilization quantity is a, let me take here is the utilization quantity is 600. 600, remember from this purchase order 500 I am utilizing fully. From the second purchase order I am utilizing the 100 quantity. So here, so there is no stock, fully stock available from the purchase order number 1. Okay, so I am utilizing some portion, okay, of this purchase order also. So the total quantity which I am utilizing is 600 quantity here. Okay, then now the accounting entries. Okay, if we talk about accounting entries, inventory raw material, now this is completely, it will get changed here 25. Let me enter here is the 600. Okay, the minus value. Yeah, fine. Minus 15,000. Okay, 5,000 will be there. Then inventory raw material account at R2. Okay, at this moment why I am only considering 5,000 rupees, because only we have received invoice for this one only. We have not yet received invoice for 12th of February ordered raw material. Okay, remember. Then inventory raw material account at R2, GRIR clearing account here. Okay, 1,000. Then what will happen? What will happen? The consumption, how much consumption it has been happened here is the, okay, the consumption we have utilized the 600 quantity. For that consumption, what would be the cost is a 15,000 rupees. Then 15,000 rupees. Then here, then you can understand here. Okay, then again the GRIR clearing account is a 5,000 rupees. GRIR clearing account, obviously it is a 5,000 rupees. Then here again we have the, again we have the price difference account. Price difference account. Okay, so now let us understand here. Now, okay, so from this 500 rupees we have completely utilized. Okay, we have completely utilized the, okay, whatever the stock we are having. Okay, we have completely utilized. Then so inventory raw material, here is the inventory raw material. Okay, GRIR clearing account 1,000. Then inventory raw material is the 40. Okay, still we have the quantity. Okay, then price difference account. Okay, okay. Okay, now here what will happen here? Here what will happen? GRIR clearing account 5,000 rupees. Then inventory raw material. Inventory raw material. Okay, which I am going to charge here is that 1,000. 20. Okay, so how much quantity which I am having? Still 200 quantity which is with me. Okay, so then available quantity is a 20, I mean 200 kgs with me. Okay, for this 200 kgs. Okay, for this 200 kgs. Okay, now the total is the, okay, the total. Okay, so now inventory raw material 200. Okay, the 200 which I am going to show into the I mean inventory account. Okay, but now how the inventory account which I am going to show, what is the available quantity here? Available quantity 200 rupees. Okay, 200 kgs. 200 kgs into 2 rupees. What will happen here is the 400 rupees. Okay, then 400 rupees here is the, okay, available quantity. Remember, available quantity here is the 400. Then the consumption is happened. Okay, the consumption is happened here is the okay, from this, remember, from this, okay, from this material, I mean whatever ordered we have ordered, this completely the consumption we have happened. Okay, the consumption what we have utilized is a 600 quantity. Okay, so here what will happen, the price difference account here is the, okay, 600 quantity consumption has happened into into 100 rupees. Okay, one moment, let me check here. This is not the correct one. Let me check here. Okay, so the GRIR clearing account is a 5,000 rupees. Inventory raw material account, whatever the consumption, whatever the stock we are having, whatever the stock we are having, this 400 rupees. Okay, now this 400 rupees has been arrived, but now what is the consumption? What is the price difference account? The price difference which we have consumed, it will come into picture is a 1200 if I consider. Okay, let me check here. Total quantity, available quantity 80 divided by, sorry, 1000 rupees divided by 800 per unit. Price difference is a 1.25. So 1.25, how it has been arrived? Total quantity divided by total price difference. This is the price difference. This is my total quantity. Then 1.25. Okay. So 1.25 here it will come into the picture. Then let me put it here. 1.25. 0.25. 400 is not the correct value, but sure how much it will come. Check here. 400 into 1.25. Then 500 rupees it will come. Then here is the 500 rupees it will come. Then the price difference, okay, so here, okay, inventory, the price difference, whatever the quantity which we have utilized, okay, then we have utilized is the 500 into 300, 800 quantity. Still we have the 600, we have consumption is happening. 600 into, I think again this is not correct one. 600 into 1.25, again 750 it will come. But now 200 into 1.25, this is also, oh, okay, this is the wrong estimation. Okay, this is the wrong calculation. That is what, see, now 200 into 1.25, 1.25, this is the value is 250. Here I just have mentioned is a wrong calculation. Okay, now here 250. Okay, then now we will get the value, correct value, 250 rupees. Now whatever the consumption which is happened, the consumption is happened is a 600. The, okay, the price, the consumption is happened 600. The consumption related value, the balance, the consumption related price difference we need to show into the price difference account. Then 600 into 1.25, what would be my cost is a 750 rupees. Then 750 what I'm showing here. Okay, now you can see here debit and credit both values are matching here. This is the if stock partially available. Okay, this is the price difference account which we are going to show. How the price difference, okay, the price difference, the price difference quantity, okay, we have the 800 quantity divided by, okay, 800 quantity divided by the price difference. How much the price difference, okay, I'll mention here is 1,000 rupees. Then quantity we have the 800. Okay, now what is the price difference per unit? 1,000 divided by 800. 1.25 is the your price difference per unit. Okay, remember, price difference per unit cost. This we are going to consider here. You can see here. You can see this is what the estimation done here. Okay, 600 into, I will mention here is 600 into 1.25 is equal to 750 rupees. Okay, this is what I just have calculated. Okay, this is the one is the stock partially available. Okay, in case stock is not available. Okay, in case stock is not available, stock not available, stock not available. So okay, what will happen? Okay, this is a C, this is the, okay, then I'll take the same example here. So this up to here, this is the important one. Then here, okay, so in case stock is not available, okay, I don't have the stock here. Okay, then what will happen here? Okay, then method moving are stock partially available. In case I don't have the stock. Okay, the fully stock, whatever the stock, I just have the 800 quantity, then the consumption also 800, the final would be 0. Okay, then the total which I have utilized is a 20,000 rupees. Okay, now 0 value here. Okay, so then I have stock is not available, there is no stock, fully utilization has been happened here. Okay, so then inventory raw material account at R2, okay, 5,000 5,000. Then the consumption account, then the consumption completely utilized is a consumption is a 20, sorry, 20. Still there is a price difference, remember, still there is a price difference, still there is a price difference, it is there, this price difference I am carrying from the beginning, remember. Okay, then remember, then the last in invoice verification, remember the price difference will be calculated at the time of invoice verification only, remember. Okay, then GRIR clearing account. Okay, what is the, okay, then GRIR clearing account is a completely, okay, what we have utilized here is the, okay, GRIR clearing, because I have received only invoice for this purchase order, so I am just booking the entry for this against this purchase order only, 5,000 rupees. Then here completely the difference, this will not come into picture, the inventory raw material it will not, because I don't have the stock. Whatever the stock I am having, okay, whatever the stock with me, the completely I have consumed the stock 800 into 1.25. What will happen? The total here is the cost would be 1,000 rupees here. Okay, then this is the completely the price difference account which I am showing. Then the to vendor account. Okay, this is the completely the, here I don't have the stock. Okay, because the zero quantity, the available quantity is a 0 here, so that is the reason if there is no stock I cannot show that one into my inventory account. Okay, so this is the completely the stock, the average price is the same, how this price difference which has been arrived, this I just have calculated here. Now you can see here, once you receive invoice against this purchase order, again you can show the same entries. Okay, so this is what the completely the process. But now most are the cases in interview you need to explain, you need to focus this process, stock partially available. Okay, in interview perspective, if we talk about interview perspective, you need to explain this one only. Okay, no need to remember all this process. Okay, batch input method, stock fully available, stock partially available, stock not available. Okay, they will ask you the question, can you explain about the price, how the price difference accounting entry it will flow. Okay, then you need to explain to the interviewer with example, remember, with example is nothing but a, okay, you need to explain, okay, the same whatever the example I have explained here. Then once the explanation, once this will be done, then you need to explain the accounting entries also, accounting entries along with the amounts also, remember, then only the interviewer will get satisfied, remember. Okay, please understand here. Okay, you just focus this one. For this one I'll mention here is the, for your interview point of view, I'll just make it some different color for our, then, okay, this is the important thing. Okay, so if anyone is having any further queries, any further doubts, so please let me know. Okay, fine. So if no further queries, so what we can do, we'll start the configuration. Okay, so configuration, because even if I start today also, again we cannot we cannot finish that one. From tomorrow onwards, so what I can do, I will